Well, I'll tell you, that time flies when you're having fun. Welcome back, welcome back. Time to get back to work. It's about that time of day again here, folks. Monday evening. It is December the 9th, 2019. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me tonight because I help traders find high-quality setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. My job tonight is to help you find the best levels of support and resistance for tomorrow, the best entry setups for tomorrow, and most importantly, how to avoid those common traps for tomorrow. That's Tuesday's trading session. And we have a lot to talk about as we break into this third week of the last month of the year. We'll grab the calendar here tonight. Got a bunch of news. Got a tidal wave of news. I heard some pundits call it on the news feed this afternoon. A tidal wave of news coming this week. We'll talk about the schedule for this week, so make sure you want to stay tuned for more on that. And of course, we'll grab some charts tonight. We got some oil, some S&P, some Nasdaq, some gold. There's a lot going on in the wake of last Friday's non-farm payroll. But I'm going to start off tonight on the crude oil, the black gold, the Texas tea. Boy, we heard from OPEC last week, if you recall. OPEC talked about a production cut. And boy, it looks like oil now has found a way back into a range, getting comfortable all around that $59 a barrel area. And anytime we see a range-bound market, the plan is really, really simple. Let's not talk about it. Let's draw it up. Let's make sure we're ready here for tomorrow's trading session. Starting off tonight here on the black gold, the Texas tea. Now, of course, we had that big announcement from OPEC on Friday. We kind of had the perfect storm, right, if you recall from last week with that low of that triangle. We had the OPEC announcement. We had the non-farm payrolls. Everything ran higher. But remember, by the time the dust settled on Friday, this of course last Friday, we had found our way into a range. Now, I know most of us were already, halfway into the weekend, right, by noon on Friday, but that was a big clue because as you can see here, made a nosedive going down. And sure enough, they pulled the string, went right back up into that trading range. So it looks like right now, crude oil is forming a range around that $59 right after last Friday's OPEC announcement. The bulls clearly have control right now. And really what that tells me is I want to be looking for levels of support underneath this trading range to be a buyer. And I've really got a couple things on my radar right now, my range expansions, my trend lines you can see down there. So I really like the buy side right now, down around that 58.60 to 58.50 area. And what I'll do tonight is we'll dig into some specific setups to look for because it's a range environment. Ranges always tell me to look for really two distinct types of patterns. So we'll talk about those two patterns and the entry setups I'm looking for here tomorrow. But boy, there's a big bullseye right back up around that 59.75 area. Anytime we see this much movement in one direction, we know the odds are pretty good. We're going to eventually get back up to retest the high. So I also want to be ready if we get a move going higher because, we heard a bunch of good news this morning regarding trade. We could easily see this thing, head fake and then run in the pre-market. So I want to make sure you guys know exactly what the patterns look like, right? Because you wouldn't want to just go buy it as it's going higher. I think the easy target, 74, and of course, the little more difficult target is up at 60. So I want to make sure you guys know how to buy this thing, right? I've got a couple patterns, two specific breakout patterns come to mind. I want to buy that breakout with the right patterns, of course, on the crude oil. So I want to make sure I'm buying underneath that range. We'll talk about breakout patterns here on oil tonight, and hopefully tomorrow will be another great day in our trade room. I'm going to jump into more details, though, on crude oil as we dig into this video tonight. How about some S&P though? I'll tell you right now, at first glance, it looks nothing but a bear market right now. Strong move down obviously gives the bears firm control of this market, but there's one very big problem, and that is the day began as a range. And then, of course, anytime we see the day begin as a range, what usually happens? What goes up usually comes back down. And unfortunately for the bears, what goes down usually comes right back up. Now, it's not just the range that's kind of telling me this. If we look at a bigger picture, right, and we'll talk about this in more detail tonight, but if you look at a bigger picture chart, and we'll kind of zoom this thing out tonight on the video, it's a little bit tough to tell if this isn't just a deep pullback, because remember, we had 3 days last week. 3 days last week. Wednesday, Thursday, Friday were red hot. Could this just be a buy the dip opportunity? It certainly might be. The problem we have right now, though, is we're very, very bearish. So I definitely can't buy this market just yet, but there's one very distinct pattern. I'm looking forward to buy it as we go higher. There's actually 3 different scenarios I'm watching right now. One reversal pattern, one pattern or 2 patterns after we get the reversal. But the bottom line is there's a big old magnet on the S&P right back up around that 44, and then possibly a pendulum swinging all the way to the opposite side of that range. I don't want to call a retest the high just yet. Right now, though, I'm looking for a very specific entry pattern, a reversal pattern, if you will, to buy back up off of that low. But wait. What if you're thinking right now, this guy's gone crazy, right? End of the year, he's been staring at charts too long. What if you disagree with me? What if you think it's a bear market right now? If you think it's a bear market, I'll tell you what to look for to sell it. But I'll tell you why I'm waiting to be a seller until I see a little bit more confirmation. We're going to break down that into all the details you need on the S&P tonight. If you're an S&P trader like we are in our trade room, you definitely want to stay tuned for more on that. Then, of course, over on the NASDAQ, boy, I'll tell you, that NASDAQ really took a beating here today. But you know, if you followed along on the S&P, it's obvious to see right now the NASDAQ is bearish. There's no doubt about that. I mean, I don't think it takes a genius to see that. But what is not so obvious is the fact that we started off the day instead of a range. And usually when a day begins as a range, it usually goes up, comes back down, goes down, and oh boy, that's not a good look for the sellers right now. We call this a pendulum swing, right? Had that big run up from last week. Market kind of sits inside of a range around that just below 8,400. They try to make the run higher. They fail. It swings back down. And you know those ranges, right? Those ranges, what are they? They are balanced spots on the chart. And so we're looking at that range rotation down and then possibly right back up again. Now, obviously, I can't just buy this market, right? It's not as easy as just buying at a support level when I think it will go higher, because right now these bears are way too strong. So I need a reversal pattern. I'm expecting this thing to go right back up around that 83.90. I'm looking for one reversal pattern, and then just like on the S&P, if we can get the reversal, right? I'm looking for one reversal pattern, then I got 2 kind of pullbacks, right? Some pullbacks and traps. We'll talk about that as we make the move back higher. Now again, I promise I haven't been drinking, at least not. Yeah, I'm kidding with you, right? But you might be thinking, this guy's gone crazy, right? This guy's gone crazy. This is a bear market. Maybe you're disagreeing with me, right? Maybe right now you're shaking your head and going, no way, we're going back down to those lows. We definitely might see within one day go from 8,400 to 8,300. We might. But as of right now, that pendulum swing is a little bit too convenient for me to want to be a seller on this. So we'll definitely talk about where I'd be looking to sell, how I would sell. I would love to sell this market. I don't care what direction I trade in, right? But I want to make sure it makes sense for us to do that. I've got 2 sell patterns I'm watching for right now. I'll give you a hint. It's not right now. We got to wait a little more patiently here to get those 2 patterns. Because again, this is very convenient. It's very convenient. I could easily see this roping in all those sellers and then whoop, coming right back up to retest the highs. If you're a NASDAQ trader like I am, make sure you stay tuned on the video tonight. And then, of course, gold. How can we forget about the yellow metal? Gold is my favorite of all of the energy future, the metal futures, right? You've got your bear market down. Trading day starts off with the day starts off with a bear bias overall. That bear bias goes into a trading range environment. That's pretty much all you need to know. That will tell you kind of what the plan looks like. First of all, it's a range bound market. anytime we know we have a range, we know we want to buy low in the buy zones below. We want to sell high in the sell zones right above. You'll also notice I've got my secret range weapon, right? My expanding triangle. I've got levels overhead. I want to be a seller. I've got areas underneath that I want to be a buyer. So the game plan is pretty simple here on the gold. Buy low, sell high, avoid the middle. But there's that big range, that big bear move down, right? Yeah, that big bear move down gives the bears, the sellers, that little bit of an edge that they need. And what that means is when I have a bias like this, a strong directional clue before it, what that tells me is I've got to use different patterns to buy off the low. I need a much more conservative, much more reliable pattern if I'm going to be buying off that low. I can be pretty aggressive selling off that high, right? Because I'm going with that trend, but I got to be careful buying off the low. Now, how about a breakout? There's a lot of space if we can break out going higher. I'd love to catch a short covering rally. I've got two patterns I'm watching for always. Anytime you see a big move in one day, you know that if that move evaporates and it starts running, it's going to get pretty good going higher here. I've got two patterns I'm going to keep an eye out for that run going higher. Right, but what if we go lower here? If we go lower, this is not going to be as easy going lower. I've got a couple key levels of support down there that I want to bring your attention to, because even if the market goes lower, I still think we've got to be careful being a breakout seller. I'm going to talk about all these details: buying low, selling high, and dare I say, catching that short covering rally tomorrow. I'm going to make sure you guys and gals are prepared for it no matter what we get. But before we jump into all the charts tonight, we get them all ready to go, right? Gold is here, S&P, NASDAQ is here, oil is here. Before I jump into the charts, though, and put the entire plan together for tomorrow's trading session, I just want to make sure to remind you and encourage you to join our mailing list. Now, you may not be aware of this, but just before we publish our video on our YouTube channel and put it right here on the blog every evening, we send an email to everybody on our mailing list. And I want to make sure you get that email so you always know when our nightly newsletter is ready to rock and roll every evening. All I need is your first name, a real email address, and then hit that subscribe now button. Don't forget, when you subscribe to join the mailing list, you have to check your email and verify your inbox. Sometimes the welcome email gets stuck in your spam folder, so make sure when you hit that subscribe now button, check your email. I'm going to send you a welcome email. You have to open up that welcome email and verify your inbox, right? If you don't, I won't send you the emails every evening. And again, sometimes that welcome email get stuck in your spam filter, so keep your eyes out there if you don't see it. And then don't forget if you have any questions here tonight. I know I do tend to speak in terminology that you may not be familiar with, especially if you're a new trader watching for the first time. If you have any questions for me, that's what the comment section is for. So don't be afraid to drop those questions in the comment section below. I'll be hanging out in the comment section after we publish the video tonight. So don't forget, post those questions down in the comment section if you have any questions as we go. And please, when you're down in the comment section, if you tune in every evening to watch this video newsletter, hit that thumbs up button for me, will ya? It goes a long way to help me expose this video to other traders who would love to learn this trading strategy. So guys, don't forget, post those questions when you got them in the comment section below. And please hit that thumbs up button, right? Show the support for this nightly newsletter. If you tune in every evening and watch and learn and use it the following day, I'd always appreciate it when you guys hit that thumbs up button, because YouTube helps me, right, by rewarding me, exposing me this video to other traders. And don't forget, guys, if you have any questions that are too much for the comment section below, or maybe you want to hear more of my voice here tonight, don't be afraid to pick up the phone. You can always call the office. I'll be here morning, noon, and night. That phone is very, very easy to ring to my cell phone when I leave the office. So don't forget, call that toll-free phone number if you have any questions about anything we talk about in tonight's video newsletter. In the meantime, let's get this party rolling here tonight. We've got a lot to cover here tonight in the video. I'll try to make sure I get you guys out of here at a reasonable hour this evening, right? Let's talk about the calendar here for this week. Now, this is the third week of the month. It is kind of unofficially known as the last full week of the year. And the reason why I say that is because next week, half the market, half the people in the market will be pretty much checked out, right? They'll already be worried about the holiday parties and the Christmas and Hanukkah, right? And whatever you celebrate season, right, coming up. So we know this week really is kind of the last full week of trading, right? Doesn't mean there aren't going to be great opportunities as we go into the end of the year, but this really is crunch time, right? If you're a professional money manager, this is the week that you really got to make those numbers look good as you go into the holiday season, because it's very much it's very much uncharted territory as we get closer to the end of the year. And again, I don't want to say you can't make money into the end of the year, because the volatility levels will kick up. As we mentioned last week, there is a sense of urgency in the markets on in the month of December. That urgency leads to bigger risk taking, right? More risk tolerance and more volatility in the market. So yes, there will be plenty of opportunities to trade next week and really every day this month outside of the Christmas holiday, the New Year holiday. And again, make sure if you are trading later on in this year, make sure you check out the CME holiday calendar to make sure you know when those exact dates are. Let's take a look though at this week, this third week of the month, because there is quite a bit going on this week. First of all, this will be the last week for my newsletter of the year. Will be done as of this Thursday afternoon. This will be the last newsletter week of the year. I will be taking the rest of the year off to work on miscellaneous things that have to be done before the end of the year, get the books all done, right? Get everything ready to go for January. I'll be back in the first week of January. That is January the 6th. So as much as I love you guys and I want to be here with you every evening, there is some certain things that we do this time of the year to finish up the year and get ready for a new year. If you're a client of mine, right, we'll be talking a lot about that in our trade room this week. So this week, the last week for the video newsletter until the beginning of the year. With that said, I will also not be here on Wednesday evening this week. I'm going to really try my best. I got a couple meetings scheduled on Wednesday afternoon. I found out this afternoon I'm not going to be able to get out of those meetings early enough on Wednesday afternoon. I will be, of course, trading in the morning with all of our clients, but as far as Wednesday afternoon, I will not, unfortunately, be sending out a newsletter on Wednesday evening. So you guys get you get JJ Light this week, right? Monday night, Tuesday night, and Thursday night, we'll have that newsletter going out this week. And again, unfortunately on Wednesday, I will not be here on Wednesday afternoon. I'll be stuck in meetings all day on Wednesday. And again, right, for professional traders, this time of the year, right, your CPA is going to want stuff, your attorneys are going to want stuff, everyone's going to want some stuff out of you. And again, this is why I say, as we go into next week, you're going to have a lot of people distracted. Markets will still be good to trade, but again, next week, you're going to start going into those days where, right, it does become a little bit spotty because a lot of traders are distracted as they have to get stuff done before the end of the year. So Monday, Tuesday, and Thursday evenings for the end of the year newsletters. I love you guys to pieces, but unfortunately, I do have other commitments I have to fulfill. Let's talk about the news for the rest of the week. You might have heard about this, but they are talking about impeachment hearings this week. I believe at this point now they're hoping for a vote on Thursday. It doesn't look like the markets care about this, to be very honest. I mean, there's one thing we know for sure right now. I haven't seen the markets respond to anything about this impeachment inquiry, which, the wisdom of crowds, the markets never lie. I mean, I'll let you make the assumption from there, but I would talk a lot more about impeachment if I saw these markets actually observing it, right? They're completely obsessed with trade. They're completely obsessed with OPEC. They're completely obsessed with the Fed on Wednesday and the UK election on Thursday. But as far as I can tell right now, the headlines about impeachment are not making any blip on the radar for these markets, right? I I will keep my opinions to myself. I'll let you make, right, the assumption on that. It does not look like we have to worry about the impeachment hearings impacting these markets as we go. Big news here as we go. Tomorrow is Tuesday, the 10th day of the month. We have nothing going on tomorrow. There's no major news on the schedule. There really isn't a lot in Europe. There really isn't a lot here in the U.S. So we really have a wide open schedule for tomorrow. We do have some big meetings tomorrow. We get the White House and the Russians and the Ukrainians meeting tomorrow. That may end up becoming something that we may, something may make a dust up from there. We are running into a big trade deadline as we go later on this week. So trade will continue to be an issue. And then as we go through the rest of the week here, Wednesday, Thursday, and Friday are very big days this week. On Wednesday, we've really got the big news of the week. The CPI report on Wednesday is going to be most likely one of the biggest news reports of the week this week. And then obviously you got the FOMC announcement on Wednesday afternoon. Those are pretty much kind of the big headline news reports of Wednesday's trading session. As we go into Thursday's trading session, everything moves now to Europe. We get the ECB meeting on Thursday morning. We get the UK election, right? The Brexit election on Thursday afternoon. Well, it'll be our morning in the US on Thursday. And of course, obviously, the big news on Thursday morning is that PPI number, right? You're thinking gold on Thursday morning. Then last but not least, you got Friday. Again, this will be a big Friday. You get a big retail sales number coming out on Friday the 13th. Will that be lucky Friday the 13th for people like Amazon, right, and Google? We'll find out, right? We'll definitely find out. That's the big news of the day on Friday. So as you can see, there's a lot going on this week. And just as a cherry on top, on Sunday the 15th, right? That is Sunday the 15th. On Sunday, we've got that trade deadline, right? Now, in case you haven't been following along the whole time, right? Like I've been kind of forced to follow along. Comes with a job at this point. But the 15th is a deadline for that trade tariff escalation, right? The tariffs on the Chinese goods being imported to the U.S. according to what we know right now. Now, that may get kicked down the road, but remember, a couple months ago, it was supposed to be a few months ago, and they kicked it down the road to December 15th. So that comes up on Sunday, right? That's a big deal. That means the U.S. and the Chinese negotiators have to have something going, I would imagine, for them to extend out that deadline a little bit further. I think everyone will agree this is kind of the big black cloud hanging over these markets as we go into this week, right? The Fed, I don't think the Fed is too big of a deal because they've pretty much committed not to raising rates into the end of the year. We do have the ECB on Thursday, UK on Thursday. I just don't think that's going to be the big stuff. I think the big cloud over the market this week here, the uncertainty that may lead to some sluggishness here this week, is that 15th deadline and kind of how the gossip, right, start to churn before that deadline, right, gets later on in the week. So again, tomorrow, quick recap. Tomorrow, no major news tomorrow. Take advantage of those blue clear skies tomorrow, because as we go into Wednesday, Thursday, and Friday, Wednesday is CPI and Fed. Thursday is all about Europe, right? And Friday is retail sales. And again, Friday, that last day ahead of that trade deadline on Sunday. Now, of course, as always, we'll be in our trade room like we are every morning, Monday through Friday, 8 o'clock Eastern time, and we're gonna put the plan together tonight, and obviously we'll trade the plan together every morning in our trade room, and we'll make sure we navigate through all of this really excessive news that we have setting up for this week. And again, I apologize for not being here for a full week this week. I really do apologize. I did my best to try to make sure. As you can see, I'm usually always here Monday through Thursday, so usually I'm able to get those things moved around, but the end of the year here, the holiday coming up, it makes it always difficult. Anyways, let's get on to it though here this evening. We got some crude, some S&P, some Nasdaq, and of course we'll wrap things up with that yellow metal over on the gold futures. Now, as I mentioned in the introduction, we had that big strong run higher right on Friday's trading session. By the time Friday had closed up, the market had that trading range. We opened up on Monday, the market pretty much ran lower just before the opening bell, and right at 9 o'clock Eastern time, you can see the timestamp down there, the bears failed and this thing ran back higher. There was actually a beautiful crown reversal right off of that low. The bottom line though is now these buyers have a nice strong run higher, right? Bulls now have control of this market right now, and these double tops combined with the fact that we're kind of back inside that area again leads me to think now this market is pretty much a bull market into a trading range. Now, we've talked about this a lot before, but in case you're here for the first time, anytime I see a range-bound market, I want to buy low, sell high, and avoid the middle. But if I have a bullish bias going into that range, now my plan changes a little bit right now. What I want to do is I want to buy low. If I have a bull market into a sideways trading range, what I want to do is look for a chance to buy underneath the range. And I like to use a pattern called a two-try failure pattern. Basically, it's a breakout pullback gone bad, right? I wait for the price to go lower. I wait for sellers to sell into it. And I simply just look to buy right into those stop losses, right? Think of it like a botched breakout pullback pattern for the bears, right? It tries to go lower, they fail, and we run higher. That's my go-to pattern underneath the range in a bull market into a range. But there's also two breakout patterns as we go higher. One of them is what I call a 1, 2, 3 breakout, where I wait for 1, 2, 3 legs. I mark a channel off the top. I find the channel low, and I buy the low of that channel. This is my go-to breakout pattern. I call it a 1, 2, 3 breakout just because of the way it goes 1, 2, 3 when it breaks free. I don't trade breakouts, right? But there is one pattern that stands out, and that is a two-try breakout. If we do see a very strong move higher that really convinces us of that breakout, I don't chase after it, and I wait for one try for the bears, higher high, two try for the bears, and a trap low. And that trap low is really kind of the secret to success on that pattern. So when I have a bull market into a trading range, what I want to do is I want to buy underneath that range. And then, of course, I want to buy the breakouts, but I only want to buy the right breakouts. And I'm going to take I don't want to buy breakouts. I want to wait for the 1, 2, 3 breakout or the two-try breakout pattern, because that's going to be right where the most reliable setups are going to be. So as I can see here, if I zoom in this chart right now, I've got this larger range, right? That large range. I'm going to get rid of that just for right now, just to keep things simple. And let's just isolate what is really the most important factor here right now, and that is we went down, came right back up, and then there's that trading range right there. Double tops, right? Give it away. Mark goes up, down, right? That is a range-bound market. Now, what does a range-bound market tell me? It tells me to wait for the price to try to go lower underneath that range, and then look for kind of like a botched breakout pullback, right? Let those sellers try to sell that pullback to the moving average, and then we'll look to be a buyer right into those stop losses. Okay, I call this a failure pattern. It's a great pattern. I love trading failures right around range-bound markets. You'll also notice, though, that I've got this trend line drawn down, right? That trend line's a good clue. It might actually be even a little bit steeper, right, like that. I've got it drawn here like this. Now, the reason why that trend line is so important is because, let's say, for example, we really rifle lower here, right, down to that secondary battle zone. If the market really makes a run going lower here, now that momentum is a little bit stronger than I want to buy into. And what I'll do is I'll let those bears try twice now to sell that pullback before I look for the buy going back in. Now, this particular pattern, I call this a nested failure pattern. It's a little bit different than your typical failure, because your typical failure will just kind of pull back and then run back up. This one is a very strong move down, and because of that, I let the bears try once, try twice, and then I look to be a buyer as we go back up into that trading range. Again, this one's called a nested failure pattern. So those are two patterns I'm watching for as we get that pullback. Now, there's a chance that we might see a little trap low here, And this market may just shoot higher here, right? So what would be some opportunities to go higher here? Well, we talked about this already, right? What were they again? There was two patterns as we go higher. One of them is a 1, 2, 3 breakout. I'm going to mark up the high off those two highs and then bring it down to that low. And notice how I draw it. I'm going to draw it almost like a hidden channel, right? Most people, when they see those higher highs, they'll draw their channel off these lows and they'll try to use that channel. That channel usually is not going to work very well. I'm going to draw off these highs instead and kind of find that hidden channel. Now, I realize that drawing your channel like this doesn't exactly fit what they say in the textbooks, but the reality is, right, not much that we learn in school directly applies to the real world, right? And there's not much you learn in textbooks that can directly apply to the real world, right? Same thing is in trading. So while the rest of the world is trying to draw these really steep channels here, I like to find these little hidden channels and buy off the low of these hidden channels. That is a great, great opportunity. Just remember, though, we don't buy the breakout. We wait for the 1, the 2, and the 3. Then we know the buyers have attempted, they've held, and they've succeeded on that range breakout. Then I can buy off of that low. And don't forget about my favorite explosive pattern, that strong move up. 1 try for the bears, higher high, 2 try for the bears. Now, a double bottom on this is the bare minimum, but make no mistake, I really hope we get that trap low. Traps are going to be our go-to for that buy because you can see we've got this, right, this resistance area overhead. So buyers, right, buyers are simply trying to get back up and retest those highs up around that 59.80. If I can get in on a 1, 2, 3 breakout or a 2-try breakout, I will definitely, though, try to leave a portion of that position open up to 60. At this point, it does seem like a pipe dream, but this can change real fast once we get opened up in Asia, and we see what they're saying in Asia overnight. Now, there's one thing we haven't talked about yet, and that is the sell side, right? How could you sell this market right now? Well, could I sell it as it goes higher? I definitely could. How do you sell above a range? Very carefully, right? Well, what you need is you need a reversal pattern. Because we're bullish right now, if we go higher here, how do I sell a bear market? I know where I want to sell. I want to sell up inside that sell zone, but I need to have what I call a crown reversal pattern. What I'm looking for is I want the buyers to try once, buyers try twice. Trap high is necessary in this reversal, and again, I call this a crown reversal. It's the only time I'll go against the trend is when I see these crown reversal patterns, right? What you're looking for here is you want to see that run higher. You want the buyers to try once, buyers to try twice, and then look for that nice strong candle. We can sell it back down in. That's called, again, a crown reversal pattern. But what if it runs lower? At what point when we go lower here can I sell this thing? I can sell it once I see a 1, 2, 3 reversal. Strong move down is 1, pull back to the moving average 2, right? And then strong move off the moving average 3, right? 1, strong move, 2, pull back to the moving average 3, strong move off the moving average. I'm going to mark up those lows. I'm going to mark up that high, find my new hidden channel, and looking to sell right off that hidden channel pullback. It's called a 1, 2, 3 reversal in this case, and a 1, 2, 3 reversal into hidden channel pullback. Now, what about that breakout? What about that 2-try breakout? Will that work? Can I see a strong move down? Buyers try once, buyers try twice. You can, but it's not the most reliable trade in the world because why? You're going against momentum at that point, right? It's an overall bull market. So if you do see a strong move down, you really got to see a strong, really, it's going to be very strong, right? I wouldn't look for it right here, right? That's not what I'm looking for. I want to see this thing real strong. 1, 2, trap high. Again, make sure you notice how I draw this pattern. Okay, 1 try, 2 try. These are lower lows for the buyers. Trap high. Okay, that will get you the most reliable entry as it's going lower if this thing just takes off to the downside. Okay, so boy, we've talked about a lot here so far. We've talked about breakouts. We've talked about reversals. We've talked about failure patterns, both nested and regular failure patterns. And by now, you might be really kind of lightheaded because of all this information we've covered here so far. So if you're here for the first time right now, what I want to do is I want to give you access to our special free course here at School of Trade. The goal of this free course, I'll put a link for you in the upper right-hand corner. Grab that link in the upper right-hand corner. I designed this free course to give you a deep dive into all of these patterns. That way you and I can make the most out of our time working together every evening on this newsletter. So if you're wondering what I'm talking about when I say failure patterns or reversal patterns or range-bound markets, trending markets, we have a very simple 3-step strategy that we use here in our trade room every day at the opening bell. I want to teach you more about that strategy, so make sure you grab that free course. It's linked up in the upper right-hand corner. If you're on the blog right now at Sideways Markets, I'll put a big red button for you right below the video on the trading blog. So no matter which option you choose, if you're on YouTube, grab that link in the upper right-hand corner, or if you're on the blog right now at Sideways Markets, hit that big red button and get registered as a member of our free trading course. In the meantime, you know the plan now for the oil. Let's keep the party rolling here. I want to make sure we're ready here for the S&P. Now, of course, the S&P, there's no doubt about it, right? The bears have control right now of this S&P. You can definitely see this strong move down. The bears, of course, completed that second leg, right? But look closely at it, and you can see the day begins in a range. And we know that when the market is bearish, going into a range, right, what do? We look for those buyer failures, that crown reversal, and sell it back down again. That buyer failure, right, bear market down. We go up, look for the buyers to try to buy the pullback. Again, it's kind of like it's a failed breakout pullback pattern. This is the exact same pattern I was just talking about there on oil, right? Oil's bullish. So if, oil's bullish. So if oil was bullish into the range, and so we'll look for that seller failure below the range, right? We are bearish now going into this range, and of course, what happens? The market runs up, the buyers sort of buy the pullback, and they fail, and the price runs back down into that range. You can see what happened, right? They had a nice big strong run down. Probably the strength of that move is the reason why we saw that continuation. Now, it looks to me like these bears have this thing in full control right now. But then you look a bit wider. Yeah, and it begins to be a little more difficult to tell. Is this just a pullback in this huge move we saw? When you look at it this way, it's like, oh my goodness, this doesn't look very bearish anymore, does it? No, it doesn't. Right? In fact, it looks like we have another one of these sharp pullbacks into a pull the string back up to retest the high. Now, obviously, I'm not going to go saying time to buy this market right now. But what I will say, though, is when you look at the big picture on this right now, it's quite easy to see that this could just be a very deep pullback off the high. Now, again, as I mentioned earlier, you might be shaking your head right now saying, no way, this is not a bull market any longer. And again, I'm not saying it's a bull market. I'm just saying I'm very concerned about trying to be a seller on this market right now. It looks like the bears do have it. They've definitely gone 1, 2, 3 legs down. I've got my trading range right here. I've taken that trading range. I use the size of that range from the sell zones, from the buy zones underneath, and boy, we are right there on the edge of that buy zone. So this is one of those times where I want to be a buyer, but the market is just so bearish right now. I need a good pattern. I need a really good pattern. Okay, so what's the best way for me to be a buyer when a bear market? We just talked about this on oil, didn't we? Right? It was selling in a bull market on oil, right, above the high of the range. What's the best way for me to be a buyer? Right? We've already got the bears in full control right now. We're sitting right at support. I can't just buy because we're at support. It doesn't work that way. All right? It's not going to make any money in the long term. What I want to do now is I want to anticipate that sellers, they're going to probably come back. They'll probably try once. They'll probably try twice. And what I'm hoping for here is to get those sellers to try a couple times. And again, minimum double bottom, ideal trap low. What was that pattern called again? It's called a crown reversal. Is this a pullback off last week's high, or is this a full-blown reversal? It's tough to tell. But one thing is for sure right now, the day began in a range. And unless we really broke free of that range down here, I don't think I'm ready to be a bear just yet. So instead of being a buyer blindly and hoping for the best, which won't be a good strategy, I'm looking for a 1 try for the bears, a 2 try for the bears. Again, bear minimum is a double bottom, right? Ideally is going to be that crown reversal, that trap low. Now, sometimes we don't get that perfect crown reversal. Sometimes the market just takes off right to the upside. And if we do get that 1, 2, 3, now I want to buy that 1, 2, 3 into that hidden channel pullback. Okay, so make no mistake about it. If the market does take off with a 1, 2, 3 reversal, remember, don't predict the reversal, wait for the reversal, and then buy the pullback. Okay, so again, ideally, I want that reversal pattern. 1 try for the bears, 2 try for the bears, back up. At the very least, make sure there's 2 separate tries for those bears. Nice big candle, buying right back up into that range. Or do we see that 1, 2, 3 run? Mark up those highs, down off that low, find that hidden channel, and we're buying off of that low. Now, sometimes the markets make a complete V bottom. Okay, the V bottom. If V bottom is off this low, look for that. You got it. That 2 try trap low. Okay, we just talked about this one. This will be that 2 try breakout pattern. But again, you can use this in other ways. If we see a very strong move higher here, don't chase after it. Wait for 1, wait for 2. Ideally here is that trap low. And really the goal is to get into this thing long before we end up back inside that range. And really the ultimate goal is try to hold that target to the other side of the pendulum swing, right? The pendulum swing, the amount of the move underneath the range is oftentimes the amount of the move up above the range. So there are 3 easy buy patterns that we're looking for here as we go higher. But obviously, right, let's talk about the sell setups here as well. I'm anticipating now we can draw that line of the low up around that high. Now, again, I don't trust, right? I don't trust this as a 1, 2, 3 and a sell off the high. You're more than welcome to take that gamble, right, off the high off this. And I do consider it to be a bit of a gamble right now. I think this looks more like a pullback than a full-blown reversal. It doesn't mean the bears don't have momentum on their side, but it does mean I'm not looking to be a seller. I'm looking to be a buyer, right? There's a lot of times where the bears have control, but I want to be a buyer, and I have to use that crown reversal pattern to really turn that battleship around without getting too aggressive on it. So if you want to be aggressive as a seller, feel free to sell off top of that new hidden channel, right? If you want my opinion though, I'm looking for that thing to hold here. And then once I see that new channel form, then I know, right, once I see them hold that pullback and make it run lower, okay, now you convince me. Now I'm going to mark up that low, find that new hidden channel, right, and then look for that sell off the top of that hidden channel pullback, right? I also think, too, if they can hold that pullback and run, we might get one of those strong moves down, 1, 2, trap high. It's a bit aggressive, but if this thing turns and goes bearish, there's probably going to be some headline news associated with it as well. Probably something regarding trade, I would imagine, here in the overnight. So if it does make and hold that run lower, this becomes now the 1, 2, 3 breakout. Again, I'd like to find a way to sell off that high, but if we don't get a hidden channel high, though, I will look for, again, Buyers try once, buyers try twice. Ideally here is a trap high. And again, I call that a 2-try trap, or in this case, a 2-try breakout pattern. And again, I'm just simply illustrating all of this. You can find a whole lot more detail about these patterns inside that free trading course. Now, where would those bears be trying to go? They're going down to pick the pockets of those buyers who got long at the beginning of Friday. So 31.17 is an easy target for the buyers. 31.03, dare I say, back around 3100 is another target for those sellers, I should say, not buyers, but sellers. At this point, it does look like that is a bit of a pipe dream right now, right? The buyers, of course, they want to get back up to retest those, right? That range. But really, though, I want to get in before we get back to the range. I've got my resistance levels overhead. This is the big target. Back up to retest those all-time highs, and obviously we'll try to leave that runner and see if we can get that full-blown pendulum swing, because the amount of the move underneath the range is oftentimes the amount of the move back above the range. That pendulum swing now will now be adjusted up around that 31.55, right, if you're holding a runner up into that high. We'll talk more about that tomorrow morning, obviously, in our trade room. We'll see how the overnight session goes. If you are trading the overnight session, though, definitely keep your eyes open on that crown reversal. Keep your eyes open on that 2-try trap. Remember, your goal is to get in long before you get back up into that range. The earlier the better, but not too early, because again, it is very much a bear market. Make sure you grab that free course linked up in the upper right hand corner, that we can learn more about these entry setups. Not to mention, as part of that free course, I also give you guys hundreds of examples of how we apply those setups to our favorite futures markets. Let's keep going, though. How about some NASDAQ? Now again, right, the kind of the first thing we notice with the NASDAQ is it's a very strong move lower. It's a very strong move down. I mean, I don't think, you do not need to be a very experienced chartist to see the fact that this thing is bearish right now. But is this a pullback or is it a reversal? I mean, look at this. If you were to look at this a little bit closer and say, well, let's just measure it up. Ooh, I don't know. We're sitting right on the halfway point. Now, again, I'm not going to say it's not bearish. It's definitely bearish, but it's a little bit, considering what we've seen, unless this is your first day looking at charts, we've seen a lot of these sharp pullbacks, right? We've seen a lot of these sharp pullbacks. And what happens is they end up giving you a 1, a 2, a trap, and they go, right? What is that called? A crown reversal. You got it, right? And sometimes they make the run up, right? Sometimes to make the steep pull back, 1, 2, trap, and go. And that's kind of what I'm thinking here right now. It's a very sharp pullback, right? What really is, like I said in the introduction here, the day begins to range, right? So again, we know it's bearish. We know it's a very sharp pullback, but the day begins in a range. And when I see the day begin like that in a range and it shoots up, and then collapses back down, you know where they're trying to go. You know exactly where they're trying to go. When the bears take this thing back down again, they've got one thing on their mind, and that is that pendulum swing. All right? That pendulum swing, they got it. Now, what do they do with it from there? Do they hold this pullback and keep the party rolling down to that range? Or do they do what I think will happen here is, and do we see the sellers, right, tire themselves out? We know the magnet is right back into that range here. And just like on the S&P, I want to find a way in responsibly, not just gambling. I want to find a way in going back up into that range. And again, this is very similar here to the S&P 500. I know we're bearish, but we're not in a good spot to be a seller. Let the bears try once. Let them try twice. What you really want to see, the most important thing here is you want to see those sellers clearly try twice, right? Make sure they clearly try twice here. Okay, the moving average, oftentimes we write like this. Once you see that strong signal candle, after 1 try, 2 try, and again, I like to say at least a double bottom there. At the very best, it'll be a trap low. At the very least, it's a double bottom, and we make that run going higher. Again, it's called a crown reversal pattern, and you'll learn a lot more about those patterns and all my other favorite patterns inside of that free course. I'm talking a lot about the crown reversals right now because a lot of these have these deep pullbacks. Not every day we'll have crown reversal patterns like this one has, right? Now, what if we don't get that crown reversal? What if we just run back up? If we run back up, look for that two try trap pattern, right? Look for that two try trap pattern. One try, two try. Again, you want to get in before we get back into that range, which is why I want to look for that trap entry or that 1, 2, 3 run higher. Mark that low, find that hidden channel, and we're buying the low of that hidden channel. So very much the same plan as we had on the S&P. Also, don't forget too, I didn't talk about this on the S&P, but this will also apply to the S&P as well. If we do end up back inside that range, what happens now? This is the same scenario we had for crude oil. It's a bull market into a range. What do you do with a bull market into a range? You buy underneath the range using what? A failed breakout pullback. Back up in, right? That's the failure pattern we talked about. Moving average comes over. Bears try to sell the pullback off the moving average. They fail, and we're buying back up into the range. The range is the magnet. What else can we do here as we try to go higher here? If it sits inside of a range, you got it. 1, 2, 3 breakout. Again, we talked about this at the beginning. 1, 2, 3 breakout. Mark the highs. Find that channel. Where's my target? Back up to retest those highs. Or maybe it's a strong move up. Oh, nope. Maybe it's a strong move up into a range and then jumps up. 1 try, 2 try. 2 try breakout pattern again. Right? Make the bears try once, try twice, and trap low underneath that low. And again, I'm just simply marking up the charts. I'm having some fun, kind of hoping you guys will learn some new stuff for tonight, getting myself all prepped up for tomorrow. If you want to see a lot more detail of all of these patterns, not to mention hundreds of examples of how we apply those patterns on our favorite markets, grab that free course up top there. And then again, if you want to be a seller, on this, how do you sell it? Hold off top of that channel, right? You could easily say this is a 1, 2, 3 reversal, right? There's your hidden channel sell. And I would normally be looking at this as a sell right now, but after 3 strong days higher last week, this is the first sharp pullback we've seen. Combine that with the pendulum swing. The pendulum swing is just very convincing. You know what I mean? The pendulum swing is very, very convincing here. I've seen these pendulum swings make absolute miracles happen. So I'm not necessarily too keen on being a seller up here. If you want to gamble on it as a seller, I will, of course, wait for that move lower here to hold that pullback. If they can hold the pullback and now I'll draw my level down. I'll find my hidden channel, right? And we'll sell off the top of that hidden channel. I think that's the key here, right? We're waiting for more evidence as we go. The buyers have an easy job, right? The buyers want to get back up into that range, and the buyers want to get all the way up, right, to retest that high. How about these sellers? The sellers have a pretty easy job here. All the bears have to do is hold that pullback now, and I would imagine they should be able to get running back down to that, right, that 8,300, right? So now we know what the plan looks like there on the NASDAQ, right? And again, make sure they hold it and make sure they get that run, right? If they hold it and they stall, the chances are we're still going to go right back up into that range here. They've really got to show me they can do this and finish off this job right now, because if not, it's just a buy the darn dip, right? That's all that's happening here right now on that NASDAQ. And again, I'm not just going to buy it. I realize I want to be a buyer, but you have to respect the market's momentum. We don't just buy at support levels when you've got this much momentum. For all I know, it'll go up and run me right over here, and I don't want you to make that same mistake that I used to make when I was rookie as well. So NASDAQ's looking pretty good there. How about some gold right now? Gold's kind of the easy one. There's not a lot of hidden clues in the gold right now. It's a trading range environment here on the yellow metal with a quite obvious bear bias, right? Now, we talked about the bull bias. When it comes to a bear bias market, got that strong move down. And of course, that strong move down goes into a range, right? Those ranges, what do we do with ranges? We buy low, we sell high. But if we have a bear bias going into that range, what do? We sell high, right? We want to be a seller in a bear market, right? What's the best pattern for it? Get above the range. Wait for those, you got it, right? Wait for those buyers to buy the pullback and sell it back down into that trading range. That's my favorite go-to pattern there, is that failure off the top. As we go lower, it's that 1, 2, 3 breakdown that will give you proof of that breakout, and we're selling off the top of that hidden channel. Or if we really get lucky in a strong move down, and you'll know it when you see it, it's a very strong run. It has this kind of fear of missing out feeling to it. I'll show you more as a client of mine, obviously. We'll do it together every morning in the trade room. But 1 try for the buyers, lower low, 2 try for those buyers. Yep, that's exactly what you're looking for there, right, for that sell going forward. So we know those are kind of the 3 basic ideas, right, for being a seller on a bear market into a range, right? I also want to remind you, too, that you can look for that crown reversal to be a buyer underneath the range. This, of course, is really for more advanced traders. These patterns do take a while to kind of get used to. They often take these reversals, that is. These reversal patterns, they oftentimes take twice, if not 3 times as long as you would think they would take, right? We talked about this morning in the trade room. A lot of times these, when you're buying in a bear market, you really got to be patient here for those bears to try once, try twice, get that crown reversal, right? And then back up into that trading range. So again, as we look at the chart, it's a bear move down into that trading range, and I want to buy low, sell high, right, and avoid that middle. Now you'll notice I've got that trading range, right? That helps me find the sell zones overhead. It finds the buy zones underneath, and you'll learn a lot more about that, by the way, in the free trading course, by the way. You'll also notice, too, I got some trend lines drawn up. If this is the first time you're watching the newsletter, you'll see that I really like these expanding triangles. In fact, we use an expanding triangle to get long off oil, right? Last week as well. So the expanding triangle there, right, is a great spot to look for buy and sell opportunities. So for example, right, if we go down underneath that trading range, how do I buy it back up again? I can buy it with that crown reversal pattern, right? 1 try, 2 try, trap, and go. I don't want to use just a straight failure pattern off that low because it's not a bull market, right? It's a bear market right now, isn't it? Get that right there, right? So 2 tries. And again, this is the same pattern, that crown reversal pattern. We've talked quite a bit, right, of over the last 45 minutes here on this video. At the same time, right, as we go higher here, I've got that trend line waiting overhead. Now, in this example, you'll notice I've got 2 sell zones. 1 sell zone, right, and then a second one right above it. Okay, these are really useful because if I get up into the first sell zone, I've got a great resistance level here at 71.5. What I can do is, as we go into that first sell zone, I can look for buyers to come in, try to buy that pullback, and I can sell right into their failure, right? You can see an example of this pattern right here, right? Literally right behind you. 1 and 2, and back down we go from there. That's the exact same pattern. You're literally waiting for the buyers to fail on that breakout pullback. It's that simple. Okay, now, what's not as simple, though, is if it really makes a jump up. If it goes into that secondary battle zone, as I call it, it's a sell zone, right? Think of a trading range as a magnet. And like any other magnet, right, you've got the kind of that force field, right? So imagine when you have a range, there's the kind of the force field. You know what I mean? Right? So buyers are buying below, right? Bears are selling above. If I can stay within these areas, I can usually expect the market now to go back into that range. Okay? Now, once we get a big breakout that goes through the area and keeps going, we know now, like any magnet, or like a space shuttle, right? That's launching off the planet Earth, has to get away from that magnetic field. That's the same type of thing we apply here, right? So as it goes higher, I look for that failure back down in. But if it really starts to go higher up here, starts to break through this resistance trend line, it's not a reversal yet, but it's getting much closer. And now at this point now, I've got to give those bulls a little bit more of the benefit of the doubt. And instead of looking for just a seller or a buyer failure to sell, I now look for that slight adjustment. If that momentum goes up a little bit stronger, right? Now I wait for the 1, the 2, and just sell it back down into that range. Hope that makes sense. A lot of this has to do with momentum. In fact, you could easily say the most important thing is momentum, because when you go with momentum, you get lucky. When you go with momentum, you can risk small to earn large. When you go with momentum, you go with everybody else in the market, right? Which always helps provide a better result. When you go against momentum, now you have a hard time using a small stop loss because you're constantly kind of under that attack of the opposite side of the market. It's difficult to risk small to earn large when you go against momentum because you're trying to turn that battleship around. So if you're a rookie trader out there with a small trade account, relatively small trade account, you really want to pay attention to momentum. And we'll talk a lot more about that tomorrow, like we do every morning in our trade room. Now, talking about a strong move higher though. We know we're looking for that 1-2 back down or that strong move up 1-2 nested failure back down. What does a breakout look like? Now, because we're bearish, what I really want is a 1-2-3 reversal. Then I can mark up that high, I can mark up that low, and I can buy off the low of that hidden channel. My target's pretty easy. It's back up to retest these highs around 1484, 1485. I'm not going to lie though. Because we have such a big right, such a big move down. Look at the little sound effect there, right? Right, as it goes lower there. I should have been in movies, right? I'm kidding with you. Yeah, as a voice, right? Not a face. All right, enough of the jokes. What if we right back higher, right? Anytime I see this much movement, if these bears can't hold it, this could easily, right? That big candle right there, that could evaporate quick. Right? If it goes that fast down, it can go that fast right back up, right? But I can't predict that, can I? So once I see it start to whoosh, right, go higher here, once I kind of feel that back, right? Once I feel that strong run up now I know, right? Now I know the gig is up, right? The bears are failing, and they're going to run this thing right back to retest those highs. Now's the time for the 1 try, the 2 try, and that trap low. Again, because it's a reversal, I really want that trap low. Bare minimum double bottom, ideally trap low, right? 2 try, trap. All right, guys? That's the idea going higher. Now, as we go lower, going lower ain't going to be so easy here. Right? Going lower is not going to be so easy. We get that 1453 area, and that's a really big low. You can't see much on this chart because we just had a rollover a few weeks ago or 2 weeks ago, but that 53.1 is a major low. So if we see a strong move down, I'm looking for crown reversal patterns going back up into that range. I'm really not looking for a chance to sell down here. Now, prove me wrong. Right? Give me a 1, 2, 3, and let's go. Right? Give me a nice strong run below 1453. I'll be the first person to say I'm wrong, right? And we'll sell off the top. There's nothing wrong with being wrong every once in a while. You got to be comfortable with that if you're a trader. A lot of times I put my plan together, I write it down in my journal, I have everything ready for the following day, and I'm completely wrong. But guess what? There's no time to sit there and sulk. You got to update your charts, figure out what you did wrong later, follow the new trend, the new momentum, find the new patterns, and go at it, right? And we do that together every morning in our trade room. Now, don't forget, before we wrap up, grab that free course. If you're serious about your trading, especially for all the new traders out there, grab that free course. it's going to really save you a lot of time, a lot of money, and most importantly, you'll know more about these patterns we're talking about every evening on this video newsletter. But for serious traders out there, make sure you come back and see me tomorrow morning in the trade room, right? Come join me tomorrow and come do it with me. Because honestly, we can scribble all over these charts all we want to tonight, but nothing really happens until we do it together. Right? It's easy to learn a strategy. It's easy to read a book or watch a video and learn a new set of ideas. What's not so easy is applying those ideas on a real-time moving market. That's why I do recommend joining me every morning in our trade room, and we can do it together. That way you're not losing a bunch of money. You're not stressing out over the whole situation, right? I know. We all want to be successful. And the easiest shortcut for success is working with somebody who has already got where you want to be. So grab the advanced course. If you're on the YouTube channel right now, I'll put all the links, the description of the YouTube video. If you're on the blog right now, it's a big blue button right below me tonight on the blog. And of course, if you're on the website right now, it's the advanced course. That includes our beginner, our intermediate, all of our video courses. It includes our daily trade room, ongoing support, all the indicators, the cheat sheets and checklists. Guys, everything you need to be successful. I wrap it all together in a very easy to use formula, and we use it every day in our trade room. If you have any questions, call that toll-free phone number right next to my ugly mug. Call that phone number, or use that live support in the lower right-hand corner. No matter what you do, though, right? No matter what you do, if you're still watching this video right now, I am so proud of you. Hit that thumbs up button. Let me know you're still here watching, right? If you're here watching right now, you are definitely somebody that I want to work with, right? So hit that thumbs up button. Come out and join me tomorrow morning, right, in the trade room. And if not, we'll see you guys same time, same place tomorrow evening, right, as we tick down the last couple videos, right, last couple newsletters of the year 2019. My name is Joseph, as always. Have a great rest of your evening. Be well out there. Be nice to each other, will ya? And be here next time, guys and gals. Adios, amigos. Bye-bye for now.